Gears from that to matters money and mobile lending apps have been on the rise in Kenya, allowing Kenyans to access financing almost immediately. And this has come with a mixed bag of goodies for Kenyans. Well, in studio for more on this conversation is investments analyst Ian Kagiri. Many thanks for joining us on News Center. A latest report by Financial Services Deepening Kenya shows that we have 49 online credit platforms in the country and rising. What is the driving growth of these platforms? Why are they so popular?
These platforms are mainly driven by increased demand from the Kenyan population, and people are actually turning to these apps to sort for financing for various things. We have currently about 37% of those who seek credit from these mobile banking apps, mostly being from the small businesses, the SMEs, and you have around 35% from households. So the thing that is mainly driving increased demand of the usage of loans issued on these platforms has mainly been that need for quick and urgent financing to fund any income shortfalls or any working capital shortfalls that small businesses may have from time to time. And they are mainly driven by things such as people who have erratic levels of income. Income today is high, tomorrow is low, so some sort to plug that effect by sorting for loans from these platforms. The same for businesses. When perhaps a business wants to pay their suppliers or things of that sort, they may resort to financing from these mobile apps.
And many have talked about the negative bits of it, but it's not all bad. Let's begin with the benefits of these platforms to both the Mwananchi and the economy.
The main benefits that you'd say these apps provide is that level of quick, urgent financial solution. A small business that has probably a purchase to fund may not have the funds to do that. So in a way, you may say that it aids in continuity of these small businesses in the operations, which of them they contribute a majority of the economy. And so the effects, though bad, there are some good effects that they may pose to both the small businesses and even the household. You have several households who use actually these loans to pay fees for their children. They use it to purchase food and things like that. So you may say that you may have some both social benefits, though latent, it does exist.
Yeah. But the central bank has come out recently calling for the regulation perhaps of some of these apps, saying that Kenyans are being robbed by the apps. Without regulation, the interest rates could be high. You don't know what information then some of these lenders could be tapping there. But what are some of the things, or how can one differentiate then between a genuine mobile lender and a Shylock?
I would say that the demarcation that exists between the mobile lending apps and probably the Shylocks is that fact that these apps tend to provide credit on an unsecured basis. You do not provide any form of collateral in return to get the loans. For Shylocks, of course, you had to put a guarantee in somewhat using, let's say, a title deed, a vehicle, something of that sort.
Right.
So that, to me, is the only demarcation between the two, because if you look at the cost of credit for both the Shylock and some of these apps, you would see that the cost is almost similar. So that aspect of lending on a quick basis without any need for requisite approvals and all that is one of the major differences between the two. Yeah.
Let's talk about the process of borrowing from a bank, traditional process. Processes have to be followed, you have to fill certain information, but you don't get those checks and balances on these credit lending apps. Do Kenyans understand really, what they're getting themselves into in terms of where you're taking your information, who has access to your information, and how risky can this be?
It's a big issue because if you look at, you've seen a lot of Kenyans borrowing from more than one app. It's there, and one of the main things that has resulted in that is that Kenyans do not, or rather they do not understand details with regards to the loans, the tenor, small details regarding the loans, the cost. So Kenyans sometimes may find themselves in a situation whereby the credit itself it becomes overbearing. They become unable to pay. They go and borrow from another mobile app and so on. And this creates, it's a big problem, and so it creates the need for regulation to be centered, especially in the fact that we should have a central information system, such as what you have the Credit Reference Bureau, so that if listed by one bureau, you cannot then go on and take a loan from another
bureau.
Yeah,
absolutely. Yeah. And for many Kenyans, it's in that terms and conditions segment that nobody really reads, and it really gets yourself into a lot of trouble. So CBK, like you mentioned, has proposed guidelines for the regulation of these apps. But what then would regulation mean for these apps, and would the borrower then be protected?
Yes, regulation, I think this is one of the main sectors that is not regulated, and we've seen a lot of growth in the sector. So regulation comes about because if you look at back in 2016, when we had the Banking Amendment Act coming into law, it capped interest rates that may be charged by a bank at a certain rate, 4% above the central bank rate. And so what this did is that it created that need whereby the small households and the small businesses could not be able to access credit from a bank. So this created an alternative market for these mobile lending apps that they could go on and exploit because they are not being regulated. And so we've seen the CBK reacting to that. The CBK last year proposed the central bank charter. It's supposed to come into effect this year. And one of the key focuses of the charter is that aspect of consumer protection and adequate disclosures to the consumer. So the charter actually requires these apps to actually text their borrowers the details of the loan, all disclosures. They should actually text these borrowers before approving the loan. So it's been centered mainly on that aspect of consumer protection and adequate disclosures to the consumer, and this is made in the hope that we should be able to have Kenyans making rational decisions as to whether to take the loan as is or maybe seek alternative solutions.
Absolutely. And even as we discussed this, CBK once again released a report. More than 500,000 Kenyans have been listed with credit reference bureaus because of these mobile lending apps. These are some of the consequences really of defaulting payments from these online credits. But like you mentioned, many Kenyans are borrowing from more than one app, therefore increasing the debt burden altogether. What does it mean then for one to be listed on CRB, and what are the repercussions of that from these mobile lending apps?
Being listed on a CRB simply means that you blacklisted, or rather it means that your access to credit becomes inhibited, in the sense that before a bank grants you a loan, they have to get your credit report from a CRB, and so that credit report will ideally enable the bank to determine whether to give you the loan in the first place and at what cost you'd be given the loan. And so you would want a situation whereby, as a borrower, if I want a loan perhaps in the near term to fund maybe my capital expenditures or anything of the sort, I should ideally be able to get a loan and at favorable terms. So being listed on the CRB would ideally mean that you'd be perhaps inhibited from gaining access to a loan, maybe, and the need may be critical. Or alternatively, if you are able to gain access to a loan, you may do so at rather unfavorable terms. Finally, and very briefly, what is the future then of fintech, really, the financial, tech industry, now that we're talking regulation, especially of these mobile lending apps? What does the future look like? I'd say the future maybe not be so bad, because if we would be able to ring in these ideally fintechs into the regulated space, this I think would bring in some I'd say rational consumption from the Kenyan population, whereby people now be able to make more financially sound decisions. And so for the fintechs, I think it continues to be a great potential for them as be able to exploit this huge market, perhaps to gain against.
Absolutely. Many thanks. Ian Kagiri is an investments analyst. We're discussing the rise of mobile lending apps and mobile lending platforms in the country there. With a report shows that there are 49 online credit platforms in the country, with one being launched each year. It is not all bad. It could be good, especially with the proposals of regulations from the Central Bank of Kenya. And that conversation brings us to a close on News Center this morning. Many thanks for being with us. My name is Michelle Ngele Hodhiambo. For more news, log on to our website on www.ktnnews.com. Good morning.